that works. Can people on the internet all across the land hear me? That is the question. Look at that. We got technology working across the board. Must be a miracle. Ben. 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 Ben's making me nervous. I got Ben making me nervous. All right. Let me do this disclosure. I'm assuming the YouTube works, but Ben's got me nervous. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your financial condition. We got Ben on board. I can't believe I got this APRN on the position disclosure. Where's Stefan? What'd you get me into? I'm just messing around, right? It's the beauty of teamwork. This company would never in a million years be on my radar for me to start a position in. It may be the worst IPO I've ever seen in my trading career. Let's look at Apron before we get into stock market, just so we can talk about how bad it's been. It's done multiple reverse splits. Currently had a big rally back up to $3.50. Yeah, with multiple stock splits here. This thing IPO'd. I'm seeing prices 164. I saw up there. That's probably the IPO day. I remember the IPO day for this thing actually 165. The IPO'd and dropped like a rock. It looks like it's got time decay, right, Gabriel? Looks like I'm looking at a chart of UVIXI. What? How is this company even solvent? Going from 165 to 3 and doing reverse splits on the way down. Yeah, here I am. I'm in it. It did, a money raise. The CEO, I think it was the CEO, right? Stefan was involved in it at $12 recently, despite it being a $3 stock, which is very weird and curious. And now they got this deal going on with Walmart. I really don't like this company. I've never, from my understanding, it was always a money losing business. Um, there's no path to profitability. We're saying that, and the crazy thing is that this didn't even IPO in the 2021 bubble, right? This IPO'd, this IPO'd in 2017. There was no crazy IPO growth stock bubble necessarily going on in 2017. But I remember, looking at this company, the IPO, and being like, I don't think this company will ever be able to be profitable. Um, and it seems like there's a ton of competition for them now as well. I mean, I get ads on Instagram all the time, actually. Maybe they knew I was living the bachelor lifestyle a little bit in Idaho for a few weeks because my wife came back to New York before me, and they were advertising to me because they know I can't cook. Um, all of these Blue Apron similar companies where you like order the food online in advance or whatever, and then it sits in your freezer and you just like I don't know make it real quick. So what makes Blue Apron better than any of those? I have no idea. But getting involved in Walmart targeted me pretty perfectly. Getting involved with Walmart is a good thing. Obviously, that's a differentiator. That differentiates us from everybody else. It opens them up to a huge potential customer base. And honestly, to be totally honest with you, if there was going to be a significant period of time, more than just a couple weeks there, where I wasn't with wifey, I probably would order something like this. To be honest, because I can't cook, and I have had not from Blue Apron, but I've had similar meals from a different company. Again, that's part of the problem. Blue Apron, there's a lot of competition, and I remember having this one time, and it was pretty good. It was I just threw it on the pan or whatever for like 5 minutes, and then ate it up, and I felt like I was eating an easy yet delicious and healthy meal kind of all in one. Stefan's saying they have capital now for a few years, so maybe they're not going to go bankrupt. I don't know. There's definitely some positive commentary that was coming out on this thing here, so I got in small early, and then I actually added a bit on the way up. And honestly, if Stefan likes it. Stefan has been such a great contributor to the team. He's gotten me involved in two different companies actually that then got bought out. So whatever. I'm gonna if this doesn't work for me, I'll probably just give it to $3 or today's low or whatever stuff. To me, this is just a total lotto ticket. Maybe someone comes in, buys this one out also, or the market upticks this thing, or that Walmart partnership helps, and I'm looking at this thing at $7 and can kind of double my money on the position real quick or something like that. I don't know. But I hate the company. I can't believe I bought a position in it. It actually trades pretty thin for $3 stock, and for me, it's just a pure lotto. Definitely not a real recommendation. All right, so let's talk about the stock market here. Same complaint that you get. Actually, I might have a fix for that. Maybe. Actually, maybe not. Oh man, where's the tech guy? Hold on. Maybe I have a fix for that. I'm gonna just try one thing one time, and then I'm gonna move on if it doesn't work. But that's my speakers. How do I get to the microphone? I'm so bad at technology. Oh, here it is. Microphone. What, is this making me louder for you guys? Am I getting louder here for you guys? Or is it on YouTube also? Yeah, I am. Too loud? Turn down your volume, I guess, if it's too loud, and turn it up if it's too soft, and hopefully that just made it louder for people on YouTube also. Thanks, Penny. I think. I am cheery. My P&L is a very solid number today. I try not to be emotional about my P&L, but it's hard not to be in at least a little bit of a better mood when your P&L is a nice, big, round, green number. Rachel uses Meal Kit Company takeout kit. Yes, I'm talking about some of the competitors. When we were I used to run one. I used to run from Rachel here. I used to run a meal kit company called Takeout Kit, and we were the first meal kit on Walmart.com. Others like Gobble ended up joining the marketplace. Walmart ended up being a terrible channel for us, and I noticed that other meal kit companies pulled out too. Don't know if this Blue Apron deal is any different than what we had. In stores would be a different story. It seems like it's online only. Just my 2 cents. Well, that's some really good information from an industry insider. If you were running one of those companies yourself. So all the same, I don't know. I'm in this apron. I don't believe in it. I'm not a believer. I'm not a believer in the company. I'm a believer in Stefan. If you ever meet him, he's got this beautiful, amazing blonde hair, and then when he starts pitching a stock with that hair, you kind of can't help but buy some. So, oh man. So not a believer in the stock necessarily, but I'll put a little risk on and we'll see what happens. Yes, I got to get Stefan on the volleyball team for sure, the Top Gun volleyball team. All right, let's talk about the market here a little bit, because otherwise we're just going to be sitting around making jokes, which is fun and fine. Getting these weird after-hour prints here. I don't like this when I'm doing my meeting. I don't remember this ever happening before. It happened yesterday too, at the same time, I think. All right. So we know what happened yesterday because we did an afternoon meeting yesterday, right? I was very nervous about the selling here and to start the month of June, thinking the bears are, can't see the top of the chart or the symbol. All right, let me fix that. Thank you. This is the type of feedback I need, right? I don't know. I'm on a new computer. We gotta try to figure this out. Hopefully that's good. All right. So, yesterday I was worried about the beginning of June. I was a little bit worried that we just had a bear market rally. that was going to end at the end of the month, very similar to what we saw in March, as the flows, the end of the month rebalance flows end, and then June comes and we totally sell off. Beginning of the day yesterday, it was looking like that was going to be the case. We sold off really hard. We had this intraday double bottom. The real key, like we've been talking about, has been the Russell. The IWM has been the leading index, has been the leading index since November. It was the key yesterday morning that the NASDAQ rally from the beginning of the day was going to fail, that the IWM had already been kind of totally selling off there. And it was also the key to recognizing that we were going to turn around, right? We talked about this yesterday. Spies gave a little lower low there just before 1 p.m. Eastern. Qs gave an equal low. IWM gave a higher low that led to a kind of a V-bottom reversal type situation, or maybe a little bit of a double bottom, depending on which index you look at and how you look at it. That then led to an okay close until MOCs came out. Last 10 minutes of the day, we had really big selling come into the market, and we closed below SPY 410, which I really didn't want to have happen because SPY 410 is a really key level. It's 4,100 in the S&P. It's the level that we broke down from in May. So the big question has been, can the S&P recapture the level that it broke down from? And it did that into the end of the month. It was extended when it did that. We were worried about the cause that potentially created this bear market rally. Can the buyers actually come in and sustain a bid a little bit? And at the end of the day yesterday, we weren't sure. We weren't sure. And then this morning when I was doing my research to prepare for the morning meeting, I was optimistic. We were set for a gap up. Let me bring up the pre-market price action here. Excuse me. So we were set for a gap up this morning. I liked the pockets of relative strength that I was seeing pre-market. I liked the IWM was performing a little bit better pre-market, which again has been key. I talked about how the earnings reports out of Chewy and Path in particular. Path, is a stock that I like, but it also happens to be a Kathy Wood name that she's involved in. Chewy has a big short float. It's been super beaten up. So those companies are growth companies. They had good reports. They beat. They're up. AI, on the other hand, was not that good. But I was thinking, what have we seen here in the back half of the earnings season? The early part of the earnings season, you missed on earnings. You guided poorly. The market would just totally destroy you. The back half of earnings season has seen companies like DKS get bought up on not great numbers. I've seen companies like NVIDIA catch a really big bid on just okay numbers. We saw that CRM yesterday have a really big gap up on what was just okay numbers. If those companies reported earlier in the earnings season, they probably would have gotten totally wrecked. Instead, they were performers here. So that kind of led to a thought process for me today where, hey, we got Chewy growth stock here, reporting good numbers and trading well. This Path reported good numbers, is trading well. Maybe they can kind of buy up this AI, and maybe we can see relative strength come in and good breadth overall for this market, right? And again, just to recap here, how did we call the bottom here as a team, right? There was a couple of factors, but one of the major factors was the recognition that the IWM and that the average stock that you were looking at made a higher low here, sort of showing strength off of the May 12th low, whereas the SPYs and the NASDAQ broke the May 12th low, made new lows on May 20th, led down by Apple and Microsoft and mega cap stocks that were then breaking down. But at the same time as that, you could look at like even an ARC growth, which is just representative of a lot of growth stocks that didn't break down there. There are a lot of stocks all of a sudden that held up better than the market, and the IWM, again, our leading index consistently didn't do that. And then, coming into the back half of May, Brent was talking about this in the VTF a little bit. This is going to be the most hated kind of bear market rally or intermediate time frame bottom, whatever you want to call it, that I can remember. Everyone was looking for the bear market rally to kind of happen in here, and then it died, and we made new lows. And then I didn't see anybody. I didn't read any literature. I didn't read any research reports. I didn't read any analyst reports. I literally didn't see a single thing that was saying what we were saying off the May 24th day, which is, hey, this is actually something to take of actually the combination, right? There was the May 20th day and then the May 24th day. The May 24th day was the Snap day. That was the day when Snap earnings wrecked the entire market. And we saw a degree of panic selling in the market in the first half of the day that then got bought up. I'm sure everybody remembers that because we kept talking about how, wow, this selling really feels different. But every research report that you talk about, that you can find, is talking about, SPY 340, SPY 360, 3,400 in the S&P. All the banks started getting really, really bearish. And yet at the same time, we're seeing different information underlying here with the market. We know sentiment's as bearish as it's ever been. Positioning is just not set up for a market bounce anymore, meaning that people are under positioned. And then, bam, that's exactly what we got. So, again, is this going to be just a bear market rally and then we work our way back down, or can there be real buying beneath it? Today was a super important key day, right? Because yesterday, the close wasn't giving us the information that we needed. We didn't get that big kind of tail off the moving averages that I thought we were going to be having at like 3 p.m. yesterday because we sold off into the close. We closed just below 410, which again, that's the key level that we broke down from. We have to get back above that level. So still coming into today, there was some uncertainty with pre-market, small gap up. Everything's looking okay. I'm thinking this market can catch a bid. And then just as I'm thinking that this market can catch a bid, just as I'm ready to come into the morning meeting with the game plan and everything that I'm planning on looking at, what happens? Microsoft happens. Microsoft provides an update on their guidance where they warn that their numbers are going to be worse than they kind of had originally stated, and they wrecked this thing all the way back down. But Evan, if Evan's here, shout out to Evan because he was super quick on noticing this information. He was like, hey, if this is entirely related to FX, this is entirely related to currencies on this morning and not really their underlying business, it might not be the worst thing in the world. And he was sure right on that. This did not turn into, and real quick, this is happening while the morning meeting is starting, right? We're speculating, is this the next Snap? We all saw how Snap, which is a company that is so much smaller and less consequential than Microsoft, was literally able to wreck the entire stock market on the 24th. And just here at pre-market, I'm doing my research and I'm ready, with a pretty strong bullish game plan in the morning meeting. And then, oh my God, Microsoft, a company of so much more consequence than Snap, just did this morning. Like, are we screwed? That's the first thing that's coming in my mind. Are we just totally screwed on this consolidation? Is that it? Now we're just going to work our way back down here, and it was just a bear market rally, and that's it? And it's not. Microsoft got bought all the way back up. Microsoft closed green today, and very quickly off the open, we were able to identify the relative strength. The first things I saw going green were semiconductors and growth stocks. AMD, right? One of you guys here pointed out in the first 2 minutes of the day, hey, AMD is green. Like, whoa, it's not what you're expecting if you're looking for a repeat of the Snapchat situation, but maybe even on steroids because now it's Microsoft. Immediately, AMD's going green. The SOXL ETF, the leveraged semiconductor ETF, green really fast. A lot of those growth stocks, as per the game plan that I was coming in with today, went green really quickly as well. And honestly, then we were just off to the races. There was some slop here this morning. I know that the SPY made that new low, and the SPY was very relatively weak, which was interesting. You would expect that the NASDAQ was going to be the most relatively weak index. The thing that I was happy about was how well the IWM traded in the first 20 minutes. SPYs, I was not loving this price action. Qs, not loving the price action either, but, look what just happened with Microsoft. So you would expect that if the market's going to be weak today based on Microsoft, tech's going to lead the charge to the downside. It's not what happened. The SPYs were weaker, and the Dow, which I usually never look at because it's such a small amount of companies, the Dow was really weak. You had XLU really weak. You had XLP, consumer staples, utilities, defensive names were acting really weak. And I'm sure you guys remember, I don't remember exactly when I was talking about it, but at some point during this year, sorry, during this month, I was talking about how I really want to see money come out of Staples, right? Like these things had this crazy kind of run up. We were looking at some of these things. We had this really run up, a big run up, and I wanted to see money come out of the defensive stocks. And off the open here, they were just super weak. So it's like XLU and XLP, and they still ended up closing the highs because the market was so strong today. We're kind of holding down the S&P. That's not the end of the world to me. We got the Nasdaq performing better. Microsoft's getting bid back up. Actually, could have been a decent little brief short here as this ADMA kind of caught up. I think we communicated that. Hopefully, if anybody took it, they got their risk covered. With the IWM, once again, the leader. My only concern all day today was on this. That's not true. I had two concerns today. One was this candle here. I really did not like this negative Maribozu. I like the relative strength the IWM put in the first four candles. Negative Maribozu came in, erased some of those gains, and then we kind of sold off real quick here, held that low and snapped back. I was a little bit nervous right there. And then I was pumped to see this candle at 1010, this positive Maribozu, give some upside continuation. And this was when Brainerd, Fed Speaker Brainerd, I think it is, was speaking. And I don't know if that's a he or a she. It's a she, right? I'm going to assume it's a she until somebody, it is a she. So immediate uptick here at 1010, and then she starts talking about how, September might be too early for there to be a pivot. Don't count on September being a pivot. She's the biggest hawk. Yeah, so that's good information. And the market didn't like that. It hit back down. I didn't like that we lost this Maribozu because when we've talked about this a million times. Technically, when you lose the other side of a Maribozu here, it can be a really bad sign, especially when that Maribozu is on high volume. This means that everyone who just bought on this candle is out of the money. When people are out of the money, it can lead to a negative feedback cycle. In this case, of all these people having to sell that stock because they're out of the money, and then instead this market just came and bought it right back up, and that was your real major positive sign. And at that point, if they were able to handle her comments as well as they did, because they were honestly pretty hawkish. I know some of us were chatting here in the VTF about, oh, here comes the Fed again, doing everything they can to make sure that the stock market doesn't go up, which we've all discussed is why they want to. It's the only tool that they have to try to tackle inflation because they can't do anything about supply side economics. When that bid got bought back up, then you knew it was on for the bulls. It was on for the bulls, and we just trended higher all day. We closed at highs, and we did some real structurally positive things here for the bull side of the market today. We got past the end of May, so that argument that this is a bear market rally entirely based on rebalances, you can't make that argument anymore. The Bears had a real chance yesterday to bring us back down. They failed to be able to do that. They had a real chance again this morning with Microsoft. They failed to do that, and we closed at highs. SPYs are clearly now above 410, and it's on a closing basis. They're no longer extended. I still want to see the ADMA on the daily chart get up to 410 for like the final piece of confirmation. But this is looking really good. I'll go back to the cues in a second. The IWM closed above 188. Extended and just closed above it by a little bit. Let's not get too excited yet. But the SPY 410 equivalent for the IWM is 188. And this is still the really important index to me. 188 is where we had our breakdown from at the end of April, early May. And if we can start getting above and closing above 188 in the IWM, I think that is, it is still a bear market. I think that is hugely bullish. Again, just ticking above and closing above by 50 cents, not really enough. I need this ADMA to catch up, honestly, all the way to 188, and that'll be a really positive sign. But again, this is just great structurally for a technical bull argument. And then the Qs still work to do. So the 410, 188 equivalent for the NASDAQ is like this 317, 318 area. I don't know why this has been happening with these charts recently. It's like 317, 318 area, and we're still we're still a ways away from it. So this still has some work to do here. I don't mind the Qs being last, to be honest with you. I like the IWM leading. I like when it's the average stock that's out there that's performing well. I like when the breadth is strong. It's just another positive sign here. And again, we know that liquidity is low. We know that sentiment's still really bearish. We know that the hedge funds are sitting on more cash right now. Funds in general are sitting on more cash right now than any other time since September 11th, 2001. I was in high school. Um, People are hedged. People are short. There's a lot of firepower out there for upside continuation. Um, so definitely really productive here. And again, just to repeat, I think I spoke about this a little bit in yesterday's afternoon meeting, but today I feel better about it because I'm getting continuation. Yesterday I was having to more defend myself. Today I don't have to defend myself in the same way. A lot of people have been complaining about the year 2022 from a trading perspective. I don't think it's a year to complain about, to be honest. I'm not going to describe it as an easy year, but there is opportunity because of the volatility, and maybe that volatility is a little bit more than we want it to be. When the VIX is at 35, because it makes it difficult to take a lot of stock because you got to give a lot more space risk, and it's especially difficult if you're a newer trader. But this really isn't the worst environment in the world, especially if you're willing to take on overnight risk when you put yourself in a win-win situation, which is exactly what we're always preaching from a game planning perspective, right? Because we have, honestly, with really good consistency, and I know a lot of the in-between has been difficult, but let me go back to the SPYs. We've called out every low of the year this year. We called out the January 24th low in real time. We called out the February 24th low in real time. We called out the March 15th low in real time. We called out this was a smaller one, the beginning of May here, this bounce back. And now we called out this low. And look at the rally here. I mean, all you need to do is trade these 5 trading sessions, put yourself in a win-win situation, keep the positions overnight, trim and trail, and then get paid. And if you're able to do that, you're making your whole year there. And I know a lot of the other stuff in between is very choppy, and I'm not even talking about the opportunities that there were to the short side of the market, which, to be fair, I have largely missed. Um, if you're trading both sides, if you're able to capture both sides, then there's been even more opportunity. So there's certainly been a lot of chop in between. But if you go back to the principles that we discussed yesterday, which is knowing when to be aggressive and knowing when to be a little bit more passive, and being aggressive on the right days and being a little bit more passive on others, you're just putting yourself in really the right situation. I was able to do a lot of buying and adding kind of into these lows, and then was really patient here, trimming and trailing, booking profit last couple of days, and then again today I did a lot of adding again. I added a lot of that Labu today, which we'll see if that works out or not. That XPI has been a little bit of a struggle. Bought that apron position. Initially, I bought it almost like a really small position, almost as like a joke with my buddy Stefan. And then all of a sudden, I'm looking at this and looking at the market, and I'm like, this might not be bad. Added to that. So it's just been a lot of opportunity. And now it's the same thing, right? Just trim and trail and continue to get paid on the work that I'm doing. And that's pretty much it, I guess. From PS here. Isn't this still a bear market? It sure is. If it was bull market, the rallies would not be sharp and just sort of grind higher. Yeah, so that is certainly the hallmark of a bull market. They tend to be a little bit more grindy, but a lot. So bull markets always start as bear rallies, though, in one way or another. So the volatility at bottoms, even on the way up. And I'm not saying, by the way, that the May low is the absolute bottom. I'm not saying that. I'm calling the May low for the time being a short to intermediate time frame bottom, not an absolute bottom. I think an absolute bottom really depends on what a recession looks like in the United States, if it comes, and then if it does come, what it actually looks like. I am not saying the low for the year is in or anything like that. I'm saying that structurally this market looks significantly more bullish than it's looked at at any other point since April. since like all of April and May right now. You know, we broke the downtrend line. We went from a pattern of, especially if you look at the IWM, this is the SPYs, we went from a clear pattern of lower highs and lower lows to now very small here, a couple higher highs and higher lows, right? We got a low, we have a high, we have a higher low, we have a higher high, a higher low, and another higher high. So we do have a confirmed reversal here. I would still call this market neutral. You know, one of the games that I love to play because I think it's a great thought exercise is the bullish bearish neutral game. You know, who is in control and therefore how should we be positioning ourselves? I'm not calling this market bullish. I'm saying it's constructive for the bulls, and I would still kind of call it a more neutral market environment here, even with what the bulls have been able to do more recently. My big picture thesis, and I've spoken about this, is I think that we're in for a lot of volatility for you know some time to come. I don't think this is a V bottom like what we saw in 2018 and 2020. Not without the Fed pivot at least, and we're a ways away. Or despite what they're saying, we're a ways away from any type of Fed pivot. You know, if you look at the history of bear markets, which we've done, a lot of times this type of bear market that's, you know, structural in nature because of inflation and interest rates, they take 3 years, 4 years sometimes for new all-time highs to actually come into the market. This could very well be that case. But for us who are tactical with our approach, recognizing the things that we recognized in May, riding this move up, and then possibly continuing to ride that move today or even adding today, that's a solid start, you know. And then we need to see. I mean, even just look at the rally that we had in March, and I'm not calling for necessarily even a repeat of that, where there was a lot of volatility. Look what happened after that. Right? We went all the way back down, and then we made new lows. At a certain point here, if we start getting really extended to the upside like we did here and like we did here, then I'll start looking to short and hedge myself again, just like I did there. But not for new lows to come in. I'll probably implement the same strategies I did up here, where I just start shorting to hedge myself for basically an equilibrium retracement type of situation as we get extended to the upside. So absolutely, you know, we are still in the technical definition of a bear market. Actually, not for the SPYs. Technically, the S&P never went into the technical definition of a bear market, but I've been saying even before, I think even from before the NASDAQ was down more than 20%, that we actually are in a bear market. Because you got to look at the average stock, right? Because I really think that the indices are misleading. And we were looking at all the data in mid-May there where something like, I think 50% of NASDAQ stocks were down at least 50%. 48%, I think, of Russell stocks were down at least 50%. So fine. The S&P, and we've talked about this too. I've seen this happen now, and I'm not saying that this isn't a bottom, but let's just say for a second it is. This will be, I think, the third time in my career, which is just bonkers to me, that the S&P on an intraday basis was down more than 20%, which is the technical definition of a bear market, but never actually did it on a closing basis. So it never gets technically added to history as far as bear markets go, which tomato on that one, right? So we'll see here on all of that. What's up, Chris? So let me scroll up here in the VTF and look for other questions. Pinterest to acquire the Yes, an AI-powered shopping platform for fashion. Mike's comment on Hertz, I'm just reading right now, is a funny one. Yep, scrolling through the VTF here, looking for questions. Got up to Rachel's comments. All right, first thing I'm seeing here, I think, is from Robert, asking me about CRM, Salesforce. My game plan for CRM today, $175 level, where the breakout occurred yesterday in the pre-markets. Okay. I traded down to almost 174 at one point yesterday. One of the major levels for today at the open, even if it's held 175, it did not react as I overthought the Microsoft news. I expected the whole market was going to sell off based on the Microsoft news. Then CRM ran higher. It gave an inside 5 and up at 10.25. That's on that pullback, right? Yep. It seems not playable for me after the previous red candle. Yeah, these two red candles were deeper than you'd like for sure. The inside 5 and up is a trend continuation setup that I really like. But you want this to mainly occur, and in theory it can do this, right? It can pull back deeper than the 21 EMA and still be healthy. That's what happened here. In practice, you really don't want this to be breaching the 21 EMA. You want this to kind of set up and happen in the equilibrium zone for continuation. And then it's also starting to become a little bit later in the day. And at 10:25 here, I think that's when we had our Fed speaker, right? Look at the other one. Yeah. That's when Brainerd was potentially sinking the market. And that's probably what pushed the CRM down more than it would have otherwise. Then everything above the high of the day seemed to extend the period. Yeah, I get it, Robert. So first of all, you created a game plan for yourself based on your pre-market research. Then new information came out after the market opened about Microsoft. And I'll be honest with you, Microsoft threw me for a little bit of a loop pre-market too. I was very confident in the research I did this morning and what I was planning on looking at, and then all of a sudden it was like, oh my god, is this all out the window because of Microsoft? And then for me, the signal, honestly, was when one of you guys, I don't remember who it was, at like 9:32 said that AMD was green. And then I started typing up all these other stocks and saw them turning green. So to me, that was the switch back to, okay, maybe this is actually going to be fine. But I totally understand how Microsoft could throw you off today and make you not want to be aggressive. And I have no real problem with that. And I agree with you. I think that the best opportunity is this opportunity. But like I just said, it's not perfect, right? And oftentimes the market's not perfect. But a lot of times when we're looking for the inside and up trend continuation or the continuation hammer for trend continuation as executable setups, we don't want the pullback to be this deep. And again, this pullback was probably only as deep as it was because the Fed speaker sunk the market there a little bit. But I totally get it. And then, now you're looking midday here. Do you really want to continue to chase price? It just becomes more difficult. So I was feeling really confident, and I know I was having some tech issues. What else is new? When I was trying to come onto the radio between like 1:30 and 2 today, I was feeling really confident when this market broke new highs, even at this time that we were going to get some upside continuation. I know lowercase James was trying to ask me about it, and I honestly wasn't concerned with this market. Like maybe into the close type of situation. Yep. Like maybe a sell off into the close on MLCs or profit taking on a really strong rally day that happens. But look at how we close. And I'll tell you what, we closed like this because people are wrong footed in this market. People just aren't properly positioned for this market to rally, even here, even with where we're at. Which means that there's more ammo for this bounce to be able to continue, and we have to pay attention to our extension rules on the upside now. So I hope that helps, Robert. Everyone wanted a hard washout, massive volumes, etc. Instead, lows on a Friday expiry. Yep. Diego's comment. Apple closed on highs. No FX concerns there. They hedge out FX? I don't know either. Shane on asking if I can speak towards my game plan on Labu. It did, yeah. Sure. So like I said earlier, if I'm trading Labu, I'm trading the XBI chart. I'm not trading the Labu chart. Labu charts, it is a leveraged ETF. It is subject to some time decay. which is inherent in the volatility on any leveraged ETF that exists. So I'm trading the XBI. I'm kind of mind blown that the XBI is not higher. It was another one of those leading signals to us on the May market bottom where this thing put in its low on May 12th and did not make a new low on, I think it was May 24th when the rest of the market did. It bounced back up and created this consolidation pattern, similar to ARK, similar to a lot of growth stocks. Some of those stocks that made this same consolidation pattern have now totally broken higher. That's what I've wanted from this XBI. This thing has not been able to do it. It's still stuck between its support and resistance zone. The support zone is basically $66. The resistance is basically $71.50. You need this XBI to get above 71, 71.50. That's the momentum trade. And I did say, like 2 more meetings in a row, I'm really only primarily interested in the breakout trade at this point because I already have the position and not really buying versus 66. I did say that. I think I even said that this morning. And then as I said that this morning, I ended up buying more stock versus XBI 66. Or technically whatever this low is what I'm looking at. 65.99, I guess is it. So basically it's $66. That's pretty much it. The low today was 66.41. And I felt bullish on the market. So that made and the growth stocks were going. A lot of times this trades with the growth stocks. From a fundamental perspective, we've looked at the data that the biotech sector is trading cheaper. What was the statistic? Since the financial crisis, I think the statistic was that this ETF is trading cheaper than any point since the financial crisis. One of you guys, another day, you guys brought me some data on the amount of cash that these guys are holding, which is also huge. I don't like trading biotech stocks. I've spoken about that a million times. I don't like the individual stocks there because there's too much individual stock risk on a drug ruling. But I'll trade the sector via the ETF. So that was pretty much it. I was feeling a bit bullish on the market. I liked how, AMD was going green. Some of these growth stocks were going green. And I decided against what I was originally saying, to be totally honest with you guys, to then put on a pretty decent sized ad in Labu, but again, trading the XBI versus $66 daily support. And that's why I know Cody unfortunately got shaken out when the low broke here. I was giving it more space than that. I actually bought here too. I'll just show you the execution, I guess, on the chart here. So I'm adding. I don't remember what this was. Looks like a buy and a sell at the same price. It was a mistake. And then selling bits on kind of the way up. So it took a pretty big ad there, but like most of the things I like to do, that ad was based on the daily chart. The risk isn't too bad. I mean, it's where I'm buying here, it's 60 cents or whatever on this ETF. Less obviously from a cents risk perspective for Labu because of cheaper, but more on a percentage basis. So we'll see what happens. I'm still not happy with this, honestly. To me, this thing. What did XBI close up today? XBI is up 1.8%. The Qs are up almost 3%. That's not good. It's not good. So I've gotten a lot heavier, and this is, I think, the second ad that I've taken in this consolidation zone. I've gotten a lot heavier again in this thing, and I'm also keeping it on a much shorter leash. It's go time. Market's rallying. Everything's breaking up. This thing needs to go also, needs to break up also. So I've taken the ad here. I like the idea conceptually. I don't love, I'm technically fine, it's still low support. There's a degree of relative weakness that's here. Because if you compare this to growth stocks, which it's an ETF, it's a little bit different. It's underperforming. If you compare it to what the market just did today, it's underperforming. So there's a degree of relative weakness here, and I think there's even fundamental value here. I can't get this thing to break up, and the technicals no more than I do. So I hope that helps Shane. Dio, your thoughts on Amazon with the 20-1 split coming on 6/6? Do you anticipate a big run up into it? Not really. No, I think it's priced into the stock. Though Amazon's been performing tremendously well recently. Which, by the way, we called this one out of lows too. It's unfortunate that the split didn't happen before this low because I don't like trading this thing as it's this expensive with this degree of a spread. Um, but this is just the most amazingly textbook double bottom here with this break of this low here with the close back above, and we talked about it as a long versus here on the very next day, and it's just given just fantastic follow through. It's actually super extended right now, which is concerning, but they put it in this shooting star yesterday and reached the high of it, which is actually very bullish. So we'll see. But I don't think that they're going to run this thing anymore or any less because of the split at this point. Could be wrong, but I don't think that splits matter in the same way they used to. Otherwise, they would have treated this better when they first announced it. They didn't treat Amazon and Google well when they first announced their recent, when they first announced the splits that are about to happen. Which is different than when Apple was last announcing its split, and it traded really well off that. So we'll see. I'm excited for them to split, though. I think that I'll probably end up trading them a lot more than I used to. Dollar Tier asking, so with Labu, then how much risk is that? Honestly, and I'm not recommending that you trade this way. I don't know exactly what penny I'm supposed to hit out of this thing at for Labu. I'm literally trading it based on the XBI. So I have an alert out for XBI 66 in front of it. If the alert triggers, then I watch it, and then if I see, and look, Labu is so thick because it's $5. I'm not worried about missing my stop loss by 40 cents. So basically, if I see visibly with my eyes that XBI is trading below 66, then I will manually start pressing my sell button on Labu. So that's kind of what I'm doing there. All right, gang, it's 5 o'clock. I actually have a 5 o'clock meeting today, so I got to jump. Great day today. I think some people on the team here did well, but it was certainly. Oh, sorry, I missed your question, Anthony. All right, we got one more question, and people who are waiting for me at 5, they can wait. With AMD and NVIDIA on days like today, especially with smaller size, how would you have trailed to maximize that move? And if you get shaken out, how are you inclined to re-enter? Okay. Good question here from Anthony. So you have to create a game plan for yourself on how you want to trail it. You could trail and what I mean by that is on the time frame. For me, the trailing rules are always going to be the same. The time frame is what changes. As a general rule, the larger the time frame, the more you're willing to give back in order to make more. So as a general rule, the larger the time frame that you're trailing on, the greedier that you are. It is very rare if you trail on a 5-minute chart for a 5-minute trend to last perfectly all day where you don't get stopped out at a pivot low. It's very rare. So if you're trailing on a 5-minute chart, you're asking to get stopped out at some point intraday. And that can be fine if you just want to lock the money away. But if you really believe in the company, the daily chart, the market, whatever, you can't trail everything on a 5-minute chart because it's going to be reward limiting in the long run. Because what you want to be able to set yourself up to be able to do is if you had AMD from 102 and it's closing at 108.50, you want to swing some of that because you're in a win-win situation and you want to see if you can continue to get paid on a run up to 125 just to make up a number. And then from there maybe to 150, and that has certainly happened to me in market environments. So you can't trail everything based on a 5-minute. You got to trail some on a 15-minute. So you got to ask yourself when you're establishing your game plan, how much size do you have? This is the advantage of having more size rather than less size. The problem with the large amounts of volatility that we've had recently is it's generally going to be tier size limited. Like I sized down a while ago from the size from the buying power that I was using, whatever, in 2021, let's just say. But my P&L swings are bigger. I'm using like half the buying power for even bigger P&L swings because the volatility has been so insane, right? And that can actually be detrimental from a game planning perspective because you can't take as much stock. And when you have less stock, you have less options from a game planning perspective, right? If you just took a 400 share position and you cover your risk on the first 200 chairs, now you have a 200 chair core position. You can't trade around a 200 chair core position, which is one of the things that I love to do for cash flow. And your trailing options are limited. You could trail 200 chairs in a 5-minute chart, 100 chairs in a 5-minute chart, 100 chairs in a 15-minute chart, 200 chairs in a 15-minute chart. That's pretty much it. Maybe an hourly you could try to work in there, or you could say screw it and give it some back to the low no matter what. And then, so that's what you got to ask yourself. And a lot of that's going to be based on the daily chart and your sizing. And then from that point, you just got to follow the trailing rules, right? Which are in my game planning class, which I don't want to, because I'm out of time here, I jump into this meeting, I'm not going to get into it fully, so just review the class. But basically, pivot low, ADMA catch up, new highs, right? So let's just say, I don't know, let's say you're alone from the first bar of the day, just to make it simple. You can raise your stop to this low when this high comes in. Then you could, I guess in theory it's very tight, you could raise your stop to this low when this high comes in and the ADMA catches up to that price. Then you could raise your stop to this low at this time of the day when new high comes in because the ADMA caught up. And then it just basically goes straight up here and it creates a consolidation. There's a low here, but it's not confirmed by a new high. Here's a new low. Actually, honestly, even if you throw this on a 5-minute chart, you maybe could have kept it all day. Then here's a low, and then a new high comes in, so you're able to raise to this stop, and just goes straight up, makes a low, makes a high. In theory, if you're on a 5-minute chart, you could raise to here, and then you're getting stopped out here. It's still a heck of a trade. Because that new high came in, it's still a heck of a trade. But I bet, without looking at the 15-minute chart, you would not be getting stopped out on a 15-minute chart anywhere up here, and you'd still have someone close. So, hope that helps. Yep. All right, guys, I gotta jump. Have a good night, everybody. See you tomorrow. We will do the usual.